So Mark, here we are in Asia's biggest financial center. Tempers are stressed because of the political demonstrations. The market taking it in stride. How worried are you about investing here?
Well, we're still pretty much fully invested. As I mentioned before, we've come into this period going into the fourth quarter, holding a little bit more cash over concerns of rising rates in the US and slower growth in Europe. So that's played to us quite well. And in terms of being worried about the tensions here, I think we've avoided, at this stage at least, the worst outcome, which has steadied markets. We've seen markets open down today, and then they've recovered somewhat since on the back of better news out of China.
But if things do get worse here, or if these demonstrations continue, do you think investors, and international investors in particular, are going to start to worry?
Well, the longer the standoff goes on, the less likely there is of compromise. And that's why over the last 24 hours, the decision for the leadership here, the government here, to meet with some of the protesters has been taken, I think, generally as somewhat good news. It certainly avoided that next leg down, if you like, in terms of negative sentiment. So international investors will be focusing on it quite a lot. They are, of course, not just looking at Hong Kong, they're looking at China and the broader region. And it's interesting to see that through these few days where Hong Kong did sell down in the first 2 days after the protests really took hold, Chinese stocks were doing pretty well. So I think that's not just on the back of local buying, that's also a reflection of the international market as well.
That's what I want to ask you, is about the broader picture and buying into China, because of course Hong Kong is a big conduit for that, with a lot of the Chinese banks listed here, etc. Do you think people are going to start to sell off? Are there particular sectors you'd worry about?
Well, first of all, to think that you can sell Hong Kong and buy China if there was political unrest here, that's not going to happen. If there's concern here and something does evolve into a bigger position of tension, then both markets will undoubtedly suffer. In terms of which sectors are likely to get hit hardest, we've been doing some work on the retail sector. Last year, Hong Kong had over 50 million tourists. 75% of those were coming from mainland China.
And right now, they're not buying here right now. So
the government has announced on the mainland that the group tours will not be issued more visas for the time being. And tourist arrivals for this period now ahead of Golden Week or during Golden Week are down. We estimate that if there's a modest shortcoming in terms of the amount of sales going through to mainland tourists, it could cost the Hong Kong economy something like 0.3% of growth.